Hi, my name is Michael Garves. I'm the private banking officer at WNB. I've been in banking for 12 years, and we are here to discuss FDIC insurance coverage. FDIC insurance coverage is to insure the deposits that you hold in your bank account with the full backing of the U.S. government. It insures checking accounts, savings accounts, money market deposit accounts, and certificates of deposit. It insures $250,000 per person per bank, depending on the ownership class the deposit accounts are in. Most banks and credit unions, not all, are covered by FDIC or NCUA. You can call the toll-free number and ask whether your bank or credit union is covered by one of those agencies, or you can go to the teller window and it should have an FDIC display or an NCUA display showing that they are covered. You would come into your local bank, you would sit down with a banker, and they would discuss your financial needs, and they would help you select the correct account for you. You would need to bring in a government-issued photo ID, which would be a driver's license or a passport. You would also need to bring in your social security number or your ITIN, and then you would open the account, and once it is funded, it would automatically be covered by the FDIC up to the FDIC limits. Large balances in your account exceeding $250,000, if you have a major life event, whether that be selling a house, inheriting money, getting married, those would be all times to sit with a banker and check your coverages. We have several solutions for that. We have our CDARS program. We have our ICS program. Inside of the FDIC insurance program itself, they have different ownership classes. They have the single party, the joint, and the accounts that have beneficiaries on them that all can increase your coverage. The CDARS program is a program that you work directly through us, and we establish certificates of deposit with other institutions within the CDARS network to make sure that you have the $250,000 coverage with each one of those institutions. That way you can work directly with us and not have to spend all of the time finding all of these other banks on your own. There are four major ownership classes. There's single, there's joint, there's ITF or POD, which is just in trust for, and then there's the IRA class. So basically, a couple could have $1 million worth of coverage with just two people if they use the different classes. They could use single with beneficiary, payable on death beneficiary to their spouse, and then they could have a joint account with $500,000 in it, and then each would get $250,000 for that ownership class. Using the ITF beneficiary class even larger, you could have a joint account with a couple and 4 children listed as beneficiaries, and they would get a total of $2 million worth of coverage based on the fact that you get $250,000 per beneficiary per owner. So each owner would have $1 million worth of coverage for each of their children, and you'd have $2 million worth of coverage.
Hi, I'm Ben Knuesel, and I'm the Treasury Management Advisor here at WNB Financial, and today we're going to talk about our ICS product, or the Insured Cash Sweep. If you have a balance, an operating balance or savings balance that's over that $250,000 limit, then this might be an option for you to make sure that all of your funds are protected, but also accessible at the same time. An ICS account is a very simple process. So you have an account here at WNB Financial, but we also have that linked to our IntraFi program where it sweeps out and actually gets housed at separate financial institutions. Now, all these institutions are domestically based, so there's no international banking that's happening there, and everything that is in those different accounts never exceeds that $250,000 limit, which makes sure that everything is FDIC insured. But again, at that same point, we still have the accessibility and liquidity that you would want out of this type of account. CDARS is a great opportunity to capitalize on a higher interest rate, but you are going to be locked into a certain term. So much like a regular CD, you go for, say, 12 months, 6 months, or 2 year. This is the same type of thing, but just making sure that all of those funds are still insured through the program. If you're looking for more of a liquid approach, this is where that ICS would come in. So with this program, you're not tied to a term. You can get that money whenever you want, and it's always accessible for you.
WNB.